Hello. 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 Good day.
Think I am live. I don't have a... Just give me a minute. I'll get a headphone. I forgot to bring that. Give me a minute.
I don't think there's a way to so if you log into Citibank, then I can balance and check. But there's definitely a way to see what's been approved by card. Just not sure if you can see that it's been So if you go to payments, and then on the right you'll see payment insight. That's why payment insight. And then maybe change the value date to today. So then you can click on in process. Yeah, that will show you the payments that are in process. So those are Brazil ones from the currency. The value date. So with Brazil, what they do is they keep the date of payment. So when you approve a batch of payments from them, sometimes their payments, their value date is only like 3 weeks in the future, for example. So if you go, scroll up, just change your value date back to 7/16. Go down, you can see there's do the same to process, but then you've got same for settlement, settlement and knowledge benefit. It's just different steps. So
Hello. Just give me a minute. I'm sorry for the delay. Hello. Mic testing 1, 2, 3. Yeah, all good. So I think you can see my screen right now. And let's go. So the time is 9:31. We have, am I clearly audible and is the screen clear? Okay, let's move ahead now. So today we have, it's currently 9:31 a.m. in the morning session. And at 10 a.m., as we all know, we have Fed Chair Powell speaking. And before that guy does the damage, we don't do anything. So today I'm not expecting a trade to form for me. This is going to be a tape reading session. mostly, and we'll see after Powell. But usually my expectation for today is very low because it's most likely going to be a very difficult session because of Powell. So let's go. These are random levels. I mean, they're not random levels, but I was not active with the markets this week. This is the first day I'm sitting in. So let's see. It's 9:31 a.m., 9:33 right now. We're going to wait and study how liquidity is engineered and how liquidity is taken with manipulation of fundamental factors. And usually, the Fed chair speaking is a fundamental factor, not that it drives the market. It's used as a smoke screen for manipulating liquidity and manipulating retailers. I'm going to set my charts on the another monitor right now. Yes. I don't know what these levels are. Yeah, I remember. I was testing out some functions of TradingView. That's what these levels are. Yeah, I was testing out some functions. I'm not going to paper trade anymore. I have a my funded FX 25,000 one-step challenge account that I'm going to trade if I have the opportunity. And I'll share as we go ahead. First, I'll just set my charts up on the other monitor. I've also decided to incorporate Dow US 30 in my analysis because I can trade that as well. The spreads on ES is terrible. It's like 0.5, like half handle. In futures market, it's 0.25. Let me show you. Yeah, you can see here it's 0.25 in the futures market for ES, and it's 0.5. That's actually terrible. That kills your RR. And more important than that, it it it's actually scary for SL stop loss placement because you can have, I don't mind slippage in my entries as much as I mind slippage in my stop loss, because I have like really small stop losses, and the slippage, if I enter and I get stopped out, that can get a bigger loss for me. That can be a bigger loss for me because of the slippage, because of the spread. I'll explain that when I show you my MT5. So sorry, I think I'm going live today after a week almost. So just trying to get the hang of it. Just give me a minute. Set. I think it's all set up now. Let's go ahead. And the reason why I am doing this right now, why I don't set up my charts before I start the live stream, is because I want you to watch this stuff, like what I do from start to end, everything, every single thing. And I press trading view icon on my desktop and I press start live stream at the same time, so that you know you get to know what I do from start to end, A to Z. So let's go to the dollar index. After a week, let's see what it did without us, without me. So we had this drawn liquidity, it reached up there, consolidated a little bit, and it left it. And I said in my last live stream that I think I went to the 4-hour chart and I said, in case you were not present in the live stream, I said that we are in a market maker sell model right now, and we are going for this liquidity below these lows, this original consolidation right here. It's a beautiful market maker sell model right here. Said that when we were around here or something. I don't remember exactly, but I said it. So let's first go to the weekly chart. We had this inversion fair value gap outline for weeks now. I'm tired about talking this inversion fair value gap. First, it was an inversion fair value gap when it was going higher. Now it's just a SIBI that was rebalanced, and now we have left it. So now we will use this SIBI as a balanced price range now, and we don't want price to go above it anymore. It can reclaim it. It can be a reclaimed fair value gap, but we don't want. I mean, it's too far away right now. We have this inversion fair value gap now for price to resist, but yeah. Also, we don't want this fair value gap. It can be reclaimed with a wick, but we have more PD arrays to resist price now. So yeah, let's go to we have this weekly busy level that I talked about in my previous streams, and we have violated it. We have not used it as support, so now we will use it for inversion. This weekly busy will be inversion. Actually, I'm not going to write anything there. Looks ugly. Now I'll change the color to red because now I'm looking for it to resist price. And I think I should remove all these levels because they're not pertinent anymore. I'll remove this as well. I don't know what these levels are, so I'm going to remove everything that I don't know, that are from previous streams and previous sessions. So top-down analysis all together again. I like to do it again because that that ingrains in my mind. I mean, what I mean to say is I like to do my top-down analysis again every day. Not that I'm changing my weekly or higher time frame biases every day, but I like to watch the levels that I watched, the higher time frame levels. I like to, I forget what these levels are, so I revise them again. So let's go to the daily. Yeah, so this is the weekly busy level that we will now look for resistance. Also, I talked when we were up here. Actually, I'll answer questions after the stream because I've once tried to answer questions during the stream and I got disoriented very badly. So I'll answer every question after the stream. Just remind me to answer. Okay. So yeah, what I was saying was, yeah. So when this weekly busy level that was green in the previous streams, and I said that we are going to. I said that this is the red level right now. It was green in the previous sessions. So I said that, yeah, this is the weekly busy level, and you can even refine it. I said it multiple times that you can refine it on the daily level right here. This is the daily busy. So this is the weekly busy, but it's a big range right here. And this is the refined level, the daily busy. And you can see how price broke it and now is using it for resistance beautifully. So right now I'm going to take off this level right now because it is a little far away, too far-fetched today, the weekly level. So I'm going to take it off right now. And we're going to use the daily level here as the inversion fair value gap. Not that the weekly level is not important, it is important, but we have a refined one, and I'm more interested. Yeah, I'm more interested in price staying below the in the lower portion of the weekly level. And what is in the lower portion of the weekly level? This refined daily level. So I'm more interested in this one because I also want price to stay in the lower portion of this weekly inversion value gap, the weekly inversion busy right here. And what is in the lower portion of it? This refined daily inversion value gap. So that's why I'm taking it off. I have it in mind. I have it on the weekly chart, but for now, I'm going to use this one. Also, we have this fair value gap, and we'll see. We'll see what we can get. I like the fact that we wicked into this daily inversion fair value gap, and the next candle we almost respected the low of it, and it moved low, and the bodies stayed below the mean threshold of this candle. So I like this. I like this for bearishness. That's what I mean to say. The next level for of interest for me is this fair value gap right here. We touched it today, and we have a retracement right now. So we'll see what we get. And this is all of this analysis is before Powell, before the Fed chair taking. So we have to be careful today. Not that I'm saying that the Fed chair will speak today and all of this will be violated. No, but you can have a quite significant manipulation intraday. And no matter how good of a setup forms intraday before Powell, before the Fed chair speaking, and you take that setup, and when the Fed chair speaks, that you will be taken out, no matter how good the setup is, no matter how algorithmic, how no matter how good it is, you can be stopped out because the Fed chair speaking is used as a smoke screen to disrupt everyone. Even the people using smart money concepts like us, they have a stop loss. Everyone does. So don't trade it before Powell speaking, in short. My bias for dollar is I want it to go inside of this fair value gap and completely, at least the consequent encroachment for today, not for today, correction, but maybe tomorrow, but for this week. and I'll be I want it to reprice up to the consequent encroachment of this value gap. I'll mark it as blue. We'll see what we get today. Today, my expectations are low, but we can have a clean bearishness tomorrow in dollar because we have a high impact news report, and also I'll like to make the difference between a high impact news report and a high impact news driver, like the Fed chair speaking. When the Fed chair speaks at 10 a.m., it is the start of the speech. It is when the Fed chair says good morning or something, and that usually goes on for I don't know how long, but I don't like to trade after when the Fed chair is speaking at 10 a.m. I don't like to trade up till 15 minutes after that, at the very least. And the high impact news driver, like some news report that comes out, like a number or the consumer sentiment number, anything, any news report number that comes out, that is one sudden just a number that comes out, a report that comes out, and you can trade 5 minutes after that, or maybe be conservative and trade at least 15 minutes after that as well. But there's a difference between a Fed chair speaking and a news report coming out. Basically, a news report coming out is usually instant manipulation and then the real move begins. That's generally what happens. But when a Fed chair speaks, that's a lot of manipulation. Most likely a seek and destroy type of environment. So I hope that's clear, the difference between that. Yeah, so the bias for dollar is I want it to go inside at least the consequent encroachment of it. My high long-term bias is go down and take out this consolidation, take out the sell side liquidity below that. That's my long-term bias, but we'll see what we get. It has to respect all the premium areas on outlined here on the higher time frames, that is the daily and the weekly. Let's go to the 4 hour. We have a fair value gap on the 4 hour here. A refined one here. I don't want price. I mean, it should drop from here. I want this to be a breakaway gap. Not saying that it won't ever come here, but for ideal bearishness today I don't want it to come here and then go down. Today, if it's supposed to go down, I want it to go down from this fair value gap, not this one. I'll write it. And again, I will answer questions after the end of the stream. I mean, before the end of the stream, when I'm done with the markets, I will answer questions. After then, I'll just focus on my own analysis because I get disoriented sometimes because this is new to me. Okay, so we've repriced almost up to the high of this value gap on the hourly chart. Let's go to the 15. Okay. So far, so good. I want respect of this bearish order block. And again, this is me speaking before Powell, so take it with a grain of salt. These are the levels I'm watching before Powell. Now it can manipulate outside of these levels, but again, after Powell manipulation is completed, after the Fed chair's manipulation is completed, I will still refer to these levels because these are the levels before manipulation. So these will be important after manipulation as well. But what I'm trying to say is it can manipulate easily outside of these levels with the Fed chair speaking at 10 a.m. Yeah, so far, I think that's going to be it for dollar. Let's go to the ES Q202 weekly. And I talked about this being my higher time frame bias for ES. As dollar goes lower, I want ES to go into this volume imbalance first, and then the small liquidity void right here. I talked about it in my previous streams. I want these levels for ES. We have this fair value gap here, this CB. We repriced upwards. Sell side is delivered, buy side has been delivered. Now maybe rebalance it and then go higher. That's what we're looking for. That's my weekly analysis for ES. So let's go to the daily now. We have the small little fair value gap here, the daily chart. Now, although it's outside the inversion fair value gap, this weekly inversion fair value gap, although it is outside of this range, the low of it, although it is outside of this range, what it can do is with heavy manipulation, it can wick into it. It can fill it with a wick and reverse. And that is still valid in my opinion for bullishness. So daily. And there is another reason behind this Fibonacci gap that is more pertinent on the lower time frames. This is the CPI low. This is the FOMC low from previous weeks. And they are relatively equal. Now understand the heaviness of liquidity below these lows. Very heavy. So there's a lot of sell side liquidity below these lows. So I want these lows to be taken out. I wanted this low when we were up here in FOMC. I wanted this low when we were here. So, and it didn't take out. So I understood then that this is future inducement. Then this liquidity, this sell side liquidity below this lows will be hunted in the future. And I think it should be hunted with Powell today. I mean, what a better way to hunt it than Powell manipulation. So understand this, not saying that we are bearish on equities, because I don't think I am, because I have a bearish bias on dollar. So that can be bullish for equities. But short term, it can take this out. And this is my short term bias. I want, even if it wants to go higher, I want this liquidity to be taken out first. That's why I denoted the daily fair value gap, because it's also below these lows. So we are studying how head chair speaking will manipulate. Who can be hurt the most? How smart money can benefit from people, from retailers chasing the movement. If you have any questions, you can write it in the chat and I will address them later. But make sure to write it in the chat so that we have, a reference point. Because I will forget them and you will forget them as well. So I will answer the question later, but I want questions to be outlined as we go, because you may have a question and you may forget by the end of the stream. And if your question is answered within the stream, you can say that, okay, I got it. But if it's not, just copy and paste that question again, and I'll answer that at the end of the stream. Okay, so it's 10 a.m. now. I think he said good morning. And let me tell you one more thing. I have not even seen the guy's face. I don't know who Mr. Power is. I've never seen him, not even on internet. So I don't watch that. I don't care about it. What I care about is how it manipulates the market. He doesn't manipulate the market. What he says and how that is used as a smoke screen, that manipulates the market. Now, so far, before Powell started speaking, the market rallied higher. It rallied even more in NASDAQ into this fair value gap right here. So what are the retailers thinking? It's rallying before Mr. Fed Chair starts speaking. Rallying heavy. What are the retailers thinking? What's everyone thinking? Woo! See what we have here right now. CPI low. Sorry, this is the FOMC. I think. Yeah, it's a FOMC low. Equal low. FOMC low, equal low with 9 a.m. today. Heavy liquidity down here. Heavy. Now this makes me even more confident about that sell side liquidity. We are inside of a fair value gap right here. This hourly. It rallied pre-Fed chair speaking. You can refine this fair value gap on the 15-minute chart. This is the refined one on NASDAQ. I think I'm going to remove that hourly one. We have a defined one here. And this is not an important level now. I have it. I had it from my previous session. So not even the previous session. I was testing out some functions of TradingView and MetaTrader. That's where that came from. Not important unless I talk about the stream. I'm also trying to be more pronounced and articulate because I noticed in my previous replays of the live streams that I mumble sometimes. I talk about it, but I'm mumbling. So I'm trying to be more pronounced. Look how clean those lows are. Looks like support. Yeah, the bulls don't want. The bulls are not letting price go below that low. Bearish order block. Yeah. Not going to market because it is close to the 15-minute fair value gap. So let's just watch the 15-minute fair value gap. How beautiful that is. How engineered that is. Oops, sorry, these are the same charts. My bad. We have a fair value gap here in ES, not traded. Fair value gap here in NASDAQ, traded up to. So that's kind of an S&P divergence. Also an S&P divergence here. Pre-Powell, pre-Fed chair low, lower in NQ, higher in ES. So that suggests bearishness in this more. ES is weaker. that suggest. No, dollar can consolidate and ES can ram lower. Indices can ram lower while dollar consolidates. Because I'm not expecting dollar to go higher anymore. ES dollar can consolidate and that can free up ES and NQ to ram lower. That's what I'm expecting. Again, an asymmetry divergence in ES. I'm expecting this to be a buy-side grade. But more small little fair value gap here. We trade up into it. Small little. Buy-side liquidity above this high. NQ is a stronger one. So for bearishness, I'm watching ES. Now, all this range here, back and forth on the 15-minute chart, it's all balanced. So I'm not expecting price to make a deeper retracement into this range. It's a balanced price range. It should resist. It should act as a wall. We have an order block here, consecutive candles. On the hourly chart, it will be more visible. Yeah, this is a bullish order block right here, the opening price. So I'm still expecting all this rally to be a Judas swing, manipulation rally. For me to change my mind about bearishness today, it has to take out the mean threshold of this bearish order block. If it takes out this level, I'll change my mind. Let's take a look at the Dow. Yeah, even in Dow, we have not taken out the FOMC low. Now, if it's supposed to decline, it should decline now. All this, I'm expecting it to be a Judas swing. The stronger one violated this value gap, but the weaker one, ES, still inside of it. Now, how we react inside of this value gap determines if it's going to go higher or lower. I favor bearishness. I favor it taking out the sell side liquidity. I favor that. Right now, I'm just watching how spreads are today. ES is shitty. Not ES is not shitty. Correction. SPX 500 cash 0.5 spread. ES has 0.25 spread. Let's see. NQ and NDX 100. The future versus the cash market. 0.5 here. And well, not the best, not like the futures market, but it can be worked with. Yeah, so let's see how ES is reacting. I will switch only to ES now. There is the sell side. Now again, I'm expecting the dollar index to consolidate. And in that consolidation, ES to go lower. Not saying that it will absolutely consolidate. It will maybe move a little bit higher, but not more than the levels that I outlined. Now, in my opinion, it's 10:22 right now. So we are far away from a danger zone. There is a picture speaking. It can still make a higher high. And I'm saying this because NASDAQ made an equal high with the high at from yesterday's PM session. Yesterday's PM session high at 1430. NASDAQ made an equal high with that. So it can take out the buy side liquidity and then go lower. Let's see, we are watching how it delivers. In my eyes, right up till now, this decline is just rebalancing the fair value gap that we outlined. That's what I'm thinking right now. I'm not watching this decline as a market structure shift and a fair value gap little here, and we can enter with this institutional order. No, I'm not watching it like that. Yes, there's a swing low here. If you watch it on the 15-second or 30-second chart right here, there's a swing low. Yeah, we broke it. Displacement. This is a big candle displacement, and there would be a better setup on the 15-second or 30-second chart here, right here. I don't have it, but I can visually see it. Not visually, but I can, and I can, we can, just forecast it. That's not the right word. That's not the right word. We can imagine it. Imagine it. For me to feel bearish, it needs to give me a better condition than this. It can still go lower. It has rebalanced it, the 15-minute fair value gap. Sorry, not the 15-minute, it was the hourly, sorry. The hourly fair value gap, it has rebalanced it. So it can still go lower. That's what I'm favoring. Honestly, I want it to drop. Drop now. But because that NQ made that high equal to the high from yesterday's PM session, a little tricky. I'm struggling to trust this high that we have formed a high in years. I'm struggling to trust that because of NQ. Dow looks like the weaker one. Definitely. Didn't even breach into the February gap like ES and NQ. Dow looks bearish to me. I mean, it did reach into it, but to the not totally filled it. That's what I like in Dow. See, this is what I was talking about. That's why intermarket analysis is important. That's how I see it, and I would trade like that at 10:23. Okay, I think you're talking about the 2022 model. Yeah, That's correct, actually. If you see it and you trade like that, it's absolutely, there's nothing wrong with that. If the conditions were valid, I would have traded like that as well. But right, the problem here is not this setup. The problem here is the condition that we are in right now because of the intermarket analysis. That's the problem. NQ making an equal high, preferably if NQ had taken out that liquidity and we were in a better condition today, I would have taken that setup. The setup's not the problem. The problem is the condition. In fact, that's like if you've seen ICT mentorship episode 2 or 3, this is exactly like the setup. That setup. Market structure shift, fair value gap, order block. If I had taken that setup, I would have entered with this fair value gap or maybe the order block. But I like to use close proximity entries, and I would have entered here. And as soon as market, went low, I would have traced my stop loss up to this high or maybe the high of this order. Or maybe I would have closed the position. I would have killed the trade manually with this retracement upside. So that's why I didn't enter, because I don't like retracements against my position. I mean, nobody likes it, but I don't like to trade expecting a deep retracement against my position. I like to trade like as soon as I enter, just market rip higher, just market rip in my direction. And then I will post the trade recording and dance and think I'm the best and blow the account the other day. Overconfidence. So that's, I'm trying to figure out myself how I'm prone to blow myself up. But I need to work on my vocabulary. I know you can understand what I'm saying, but the words that I use, I would have definitely been stopped out with this retracement. Definitely. I'm not a guy that will place my stop loss above this high. I'm not that conservative. And that's what I talked about. In my eyes, this was just rebalancing the hourly fair value gap. If it's supposed to go higher, let's see. Not saying anything right now. This can be immediate rebalancing right here. But that's not valid, the immediate rebalancing, because I'm not expecting it to go much higher. Maybe a little bit, but not much. So every PDRA will fail on me if I try to go against my narrative. I mean, I can be lucky and can work out, but I'm not going to go against my narrative. This is a little troublesome right now. What is? Dollar is rallying right now. And ideally, with the rally in dollar, it should have declined. I mean, if it was, it should have done that. So let's see if it does it now. Looks like it's shifting. Mhm. Just watching. Just watching. If it goes lower, I would use this candle as a breaker. Let's see how it reacts to this candle right there. The low of it. Dow looks like the pair to go for bearishness. Dow looks good. Not interested in Nasdaq. I think we are valid now for sell side as we outlined, but we might not get a setup. But even if it does not give you a setup, can you just understand something right here, that why price did what it did? Why I outlined a narrative and how it delivered according to the narrative. I said all of this rally is a Judas swing. Even though, when it's rallying and it's making higher highs, it kind of feels like, am I right or am I wrong? Is it going higher? It could have gone higher. I could have been wrong. But if it was going higher, I'm not interested. I'm not doing anything. I'm just sitting out. Can you see how fast this decline is? How looks like it's running for something. It wants to, it's running like a bullet. It wants to kill something, and you know what it's trying to kill. Isn't it? You can also see Nasdaq, why it's not moving as much as ESS, and you can also see Dow. It's so close to the objective now. Why it's moving like it's moving. It's the best for bearishness. Dow. I didn't get an entry, and I'm not sad. I think Nasdaq will be dragged there as well, like the six sister. It is a six sister. Nasdaq will be dragged there as well. And can you understand why am I not saying, and this is the important thing, why am I not saying that Nasdaq will make a higher high? Nasdaq will not go down because it is not showing weakness. I think Nasdaq in future will show weakness and it will be dragged below the lows as well because of narrative. The narrative, why it should go where it should go. Why? That's the most important thing, the why. You're feeling lonely right now. Can you say yes if you're watching this? An aggressive entry in this would be when I outlined the breaker here, I could have used the low, and when this candle, just just opened and touched it, I could have gone short with a market order. That would be an aggressive entry, but I failed to execute. I was late. And also I don't want to execute in ES. Look at the spreads, man. Like, damn. If I use a limit order at this low, I would not have been failed because of the spreads. If I used a market order, I'm not comfortable. I'm afraid of the slippage. So let it go. I had my entry at that first value gap, but canceled the order. Okay, if you had the entry at this value gap, I think it is a valid 2022 model, but you should have been cognizant of the fact that NQ could have made the higher high because it was, equal high with yesterday's PM session. So you could have had a conservative stop loss here that respects, the hourly fair value gap here. I mean, that could have been a trade. I'm not comfortable with it. Doesn't mean you can't be. You can be comfortable with it. That's the conservative stop loss, but I'm not comfortable with this kind of retracement. I mean, that is a valid trade in my opinion, but I'm scared of it. I know my impulses. I know. I mean, if I would have and this is I talked about this breaker. I said, if this could have been an aggressive entry. And if I had gotten this entry with the opening of this candle, and as soon as it touched it, look how quickly it would have moved in my favor. And I could have easily rolled my stop loss up to break even now. I would have taken a partial, maybe not a partial, because I'm confident about it coming here. I would take one partial here, a small one, and I will keep a runner, a significant portion runner for this ultimate objective. But this is the kind of entry I want. Like enter and it rolls. Boom. This is the kind of entry everyone wants, but you have to be, this is a little complicated and you have to time the market. That's what I literally want to do. And I sometimes get successful in doing it, timing the market. If you look at this on your more than 1 minute charts, 2 minute, 3 minute, 4 minute, 5 minute, 15 minute even, you can see a 2022 model forming right now. I got an entry in Dow on the 5-minute chart. I don't like the way I entered. I entered with a market order when I touched the 5-minute inversion fair value gap. I'll show it. I'll show it. Seriously, no, I'm not proud of the way I entered. I think you can see my MT5 now. I entered, I wanted to enter with the breaker here, this 2-minute. I pressed the market order here, but it retraced and filled me here. I have my stop loss above the breaker. But anyways, my take profit is below this. I think this is the FOMC low. Yeah, FOMC low. This is my take profit. Now I don't want the inversion fair value gap to be violated. I want price to stay below the inversion fair value gap. That's what I want to see. But I'm try. I I got a close proximity entry, a very bad entry in my opinion. I'm literally, I don't like it, that entry. I should have used a limit order, but the concept is more important. The bias, the narrative, that's more important. It's coming here, wait for it. I think it should complete the run in the next 10 to 20 minutes. A very bad entry in my opinion. I could have used a better stop loss. I could have used a more aggressive stop loss, but okay. Not too bad for a first trade on the platform. So yeah. Next time limit orders for sure. Still got a 2022 model entry, so I shouldn't complain. Just wanted that 2-minute breaker as soon as it touched it. That's what I wanted. I pressed the button when it touched the breaker, but it retraced a little bit and it retraced a little bit and the market order. So I am up 1 hour, $250, 1%. When we take out the sell side, I will get my stop loss up to break even. Small little volume imbalance here. I will take a partial with sell side liquidity and roll my stop up to break it. I'll show my trade again on the 1 minute chart because this will answer a question. I think you can see the screen. If you can try a different method. Can you see? Yeah, this is a better method. I can drag my MP5 to this one. See this. I wanted to enter with this breaker and also it inversion fair value gap here. So I wanted to enter with this breaker, but I got an entry here because of the market order, not because of it. This is not because of the spreads. I will not blame the spread anymore because it's not. The spread is good, but because it retraced a little bit and I was late in pressing the button. This is a 2022 model entry. Not that I was looking for a 2022 model. I was looking for the inversion fair value gap and the breaker. But this entry is a good 2022 model, right? Now, admittedly, I want to close the trade and enter again with a better RR. That I think I should not do that. Admittedly means that's my impulse. I want to do that. That's a too not that it's a too wide of a stop loss. I'm used to having small stop losses. Don't think it's reversing. Okay. I close my trade right now because I'm going to enter again with a better RR. Or maybe just again with the breaker. Please give me an entry. Okay, I got an entry. Turtle soup, breaker, Favali gap. This is a little deeper retracement that I did not expect this kind of retracement. Still, let's see. I got an entry in Dow with this turtle soup above this high Favali gap breaker. Touched it, gave me an entry. I hope you can see this. I entered here, exited here, $15 something, around break even. Entered again here. Turtle soup above this high, breaker, Favali gap. Let's watch the down. why we had such deep retracement. Again, NASDAQ going for the higher high. Equal highs in NASDAQ. I think it's going for that. Dollar rallying asymmetrical. I'm specifically aiming for this FOMC low. I'm up 1 hour right now. Now, admittedly, I don't want it to, I mean, mentally, my stop loss is at break even. I got kind of a perfect entry right now. Perfect. When it breaks these lows, I will roll my stop to break even. Okay, now is the time for me to roll my stop loss to break even and let the trade run. So now I'm risk free. Now, even if it, just does not give me what I want, I've not lost anything, have I? The only thing still troubling me is the fact that Nasdaq has not made a higher high yet. I mean, I wanted to take out liquidity and then reverse. That will be like the perfect scenario for me. Other than that, I mean, even if it stops me out at break even, I'm done for the day, and it's just okay. I'm better than break even right now, so I'm done for the day, and I'll let it run. I will let it run, or I'm stopped out at break even. That's the thing. So it's a comfortable situation for me right now. I got a perfect entry close to the highest high at the very tick. Not the first time, the second time. The first entry I closed it better than break even. The second entry was perfect. And now the stop is at break even, as you can see on the screen. So it's kind of a comfortable situation. So I'll let it run. I don't know why, but every time I live stream, I have to go to the bathroom. Maybe it's the question. Or maybe it's just a natural question. Yeah, I'm going to the washroom as well. So I think I'll let the stream continue, but I'm going to the washroom right now. Bye-bye.